Upstream, are you with me? Round the rainbow, curtain in the city, rushing through me, down low. Upstream, are you with me? Feel it.
Good afternoon, everyone. BC Richfield here, coming to you live from London. Just got a couple of minutes past midday here, making it the same time UTC. A big shout out to everybody who's joining us live today, as well as everybody that is watching this on recording. Good morning, Erica. How are we doing? Everybody else as well that's joining us across all the streaming platforms today. We're live on YouTube as well as Twitter. Nit, how are you doing, my friend? Good to see you. So we're going to keep today's show a little bit punchy. I'm going to try and keep it around about 30, 45 minutes. I know I say that quite regularly, so let's see how we go. Craigie boy, how are we doing, my friend? So we'll just give it a minute, just let some more people start to come in. Normally kind of start to flood in round about now. Been getting about 4,000 of you live on a regular basis now on Mondays and Wednesdays, which is absolutely awesome. Just want to give you all a really, really big shout out. At the end of the day, I know a lot of you, are working full-time jobs, have demanding family lives, bits and pieces like that, but you still kind of turn up and put in the work, which is what we see at the Bird Nest as well. And it's always really, really inspiring. Ultimately, everybody in the trading team over there were all at that point in their lives, right? It's all about sacrifice. Gio, you sly old dog, where the devil have you been? Good to see you, mate. James, good morning. Daniel, hello, mate. Great to have you with us. Yeah, all good here. Thanks, mate. All good. And Calvo, checking in, silent listener, phone in pocket, full sneak mode activated. Absolutely love to see it. All right, guys, because I want to keep this one just a little bit shorter and punchier today, right? Especially for all of you that are tactfully sneaking a look while at work. I just left the squiggles up for Monday's show, right? Just for a couple of reasons. One, I think, we want to make sure that we've got accountability for what we're looking at, but also that we're learning from it. Okay, what actually did play out? What did we see? What did the market kind of give us in the end? Now, obviously, these are kind of just two larger areas of absorption. Okay, so we're looking at this down here as, you've got your demand, you've got your supply. Price is just continuing to range between here. But I think the most interesting thing on a daily scale is looking at this, right? So daily order block here. This is what's capping the upside, all right? Now, what's capping the downside is this swing low, all right? That swing low there, real kind of minor low. Nothing particularly stand out about it when it got set, other than the fact that it was an inside bar pattern, all right? And now everything is just kind of holding up in here. So just so that you can see the plans here, well, look, looking at this area, as it offered a lot of absorption, right? Look, price just trying to get lower here, but ultimately the wicks were just winning out. And on Sunday, I said on the Bitcoin report, if we wick below, we climb back above here, then Monday we're trading this higher. First of all, to the order block, and then ultimately to this high. And, we saw a pretty strong rejection yesterday of that order block. But once again, price failed to close underneath. So, it's really obvious. If we get the close underneath this area, we look to retest as resistance and we sell off to the liquidity resting lower. So based on that principle, I am just going to delete these just so that the chart's nice and clean. And then we can dive into the lower time frames and look at what we're throwing out there. Ozzy, hello, mate. Good evening as well. No, you've definitely been a lot later, mate, as of others, but it's just great to have you with us. Scale AI, hello, mate. Welcome. Yeah, sorry, I can't see the comments before the stream is posted as well. So it's if anybody has commented on something or said hello and I haven't said hello to you, I do apologize. While the kind of pre-stream intro and that is running, I don't get access to those comments. So when I log in, the first one I saw this morning was Erica saying a lovely hello to everyone. So if you were before that and I've missed you, I do apologize. Lodvik, hello, mate. Great to see you. So really, really simply, I want to kind of really zoom in here, right? Because I'm really interested that liquidity targets and that pretty straightforward for me here with Bitcoin, all right? So, you know, this is a weekly low that's capping the market. Let me just show you this very quickly so you've got full context. Really, really simply, you know, you might think, are these two big ugly grey boxes or blue boxes, however you see them, but for me, they're really, really key because they're embodying all these major wicks, the rejection that was from here, you know, the good buying opportunities we saw from down here. So ultimately, you know, realistically on a higher time frame, I want to see price, you know, really get down below this if I think that we're going to move lower. And ultimately, you know, by the time we kind of close above this, then there's an argument that price is really in the ascendancy here. So that's what we all want to see. We want to see price closing up above here. But what are all these lines? This line here, this high at 105, 160 flat. Again, flat numbers, round numbers, you know, do with that as you will. That's what's capping the market. And the reason for that is none of these weekly candles have managed to close above. Every time you get up there, we hit some kind of swing failure pattern or we see some absorption, long upside wick, price then sells off, but only down to here. And then we see the reverse down here. Price is coming into this level. We see the longer downside wicks. Ultimately, we then get the expansion back to the highs. Price is just ping-ponging around in this range. What's capping the lows, more specifically, is 92,273 flat. And what I mean by flat is that it has 00 on the end of it, right? Very difficult to do that if you think about, you know, markets, how they move. So always a little bit suspicious, like not in necessarily a bad way, but of these round numbers, 105, 160 flat. All right, this one up here almost got there, 108,351.99. So that's of interest for me because that was the swing failure that led to this sell-off. My only concern now, looking at this on a weekly scale, considering that I'm looking for price to move to pools of liquidity, right? Old highs, old lows, rebalancing gaps, all right, reacting to order blocks. Where are the buyers? Where are the sellers? So with that theory, when a high gets run, I'm then looking for price to seek liquidity elsewhere, in which case it was this low here and this low. So we fulfilled the upside liquidity, fulfilled downside liquidity, fulfilled upside liquidity. We haven't really fulfilled downside liquidity here. That's actually this wick, all right? That's the low that comes in at 89,268.48 here on Bitget, all right? So the consideration for me here is, you know, what's price doing here? We're moving lower, we're moving higher. The weekly doesn't really tell me too much, which is why we've kind of got a much cleaner read on the daily. Although, you know, looking at this today, it's a little bit of a mixed bag again, right? Because we took the prior day's high. Whenever you're ranging, prior day's highs and lows, especially, are fantastic liquidity pools, along with prior weeks, lows, months, etc., right? But what I'm looking at here is I'm saying this is the order block that's capping the upside. Price once again tried to make a move into that, then got pushed back down, and then goes outside of that as well, right? So what we don't do, though, is we can't get outside the low of the mother bar, right? So this is the inside bar pattern. If you want to know more about the pattern, I'm not going to kind of go over it today. You can find it pinned to the top of my Twitter profile. You have a large candle here or any candle here whereby the second candle closes within its range, can't exceed the low or the high. Now, you normally see them with slightly bigger bodies than this, but the principle is the same. We're then looking at these as two ranges, all right, mostly focused here on the mother bar range, which is the first, the larger of the two candles. Now, when you run the range lows on these, you then look for price to come back inside the range, and then you trade it to the opposite side of the range, but via the midline, yeah, which is this dotted line here in this case, and we can see the two rejections that price has had here. So at the moment, I don't know. There's just not a very clear read on this for me, right? Because price still can't close below the mother bar. We can just see this green box isn't really specifically anchored to anything. It was just showing the absorption from these wicks as we go through, right? Yeah, we had this kind of abnormal wick that comes down to here, but with these, typically we look like we do with an order block, and we look to 50% of it to be respected. Aussie, looking forward to all this. No, seriously, 2 days from retirement, or is that kind of I don't know, hopefully at least a few people as old as me here remember the film Lethal Weapon and Riggs and Murtaugh in that. Danny Glover and Mel Gibson, who are just brilliant in that, but Danny Glover is very close to retirement when he gets assigned a pretty nutty partner in Mel Gibson, and just brilliant 80s films. Turkman, hello mate, good to have you with us. So look, what we're looking for here is if we're looking at this almost as a range low here, is this the deviation, price stepping back inside, and now we're looking for expansion? The truth is, the issue with that is we've taken prior day's high here and prior day's low. So we've swept both key liquidity pools, immediate liquidity pools, when we're looking at this on an intraday basis, especially. The other issue that we have here is we have a big bearish engulfing candle showing a lot of sell pressure. Okay, so at the moment, things aren't very clear. So what I'm going to do is I'm moving down to a 4-hour here. Let me just get rid of the session breaks. You know, I specialize in intraday trading as well. That's my real kind of bread and butter, right? So I'm looking for these kind of, you know, sweeps and moves above and below previous highs, previous week high, daily highs, lows, etc. The other thing I'm looking at with great interest are gaps as well as order blocks. Now, order blocks I find can be a little bit hit and miss. Ideally, you want to see one that's first taken liquidity, right, which makes it a more high probability order block. But then again, you know, what we're ultimately looking for is where are the buyers stepping in? You know, you got a good buy here, 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 and again, it looks like another good buy here, right? So, you know, when we look across the line here, it's these lows that we're looking for. Now, this was an interesting move, right? Because on the 4-hour, this is the deepest that price, you know, since we kind of made this area of absorption here on the 4th of February, first time the price has really kind of closed down below this. But what I like about it is how quickly it got back above. So for me, what I'm watching here with any interest is if we retest this area here, which is a pretty weak 4-hour order block, down close candle, closed above. It's at minimum a change in state of delivery. This body is within the range of these two larger bodies. However, you know, for me, if I've got too larger area, then I will consider the smaller candles here, as long as they're not a doji candle, right? So, you know, like, I'm not a big fan of these very, very small bodied candles, you know, or doji candles here. Looking for something that's got at least a decent bit of a body with it, unless it's obviously a full body candle or consecutive candles. So if we're looking at this as an example here, right, if we look at this down close candle, price closed above it here, the expectation here when we're looking at order block theory is that when we close above a singular or series of down close candles, in this case, yeah, price closes above here, we look for this area to hold, 50% of this area to hold, the consecutive candles round about here. And then we, you know, look for this for continuation. So when price came up to here, yeah, and we can see, let me just do that ridiculously thick for a moment because you can see that overlays the daily order block. When price closed above here, the expectation is that price would use this area as support. So one thing that does for us is it shows as price closes down below here that there's weakness here. That order block has just been invalidated, all right? So as we look at that, we say to ourselves, right, we've closed well below the 50% here. We have taken liquidity from the lows, but the chances are that price is now seeking liquidity lower. If you then come and get back above this level, yeah, and step back within this basically range, then you can say to yourself, okay, price is showing strength again here. So at the moment, what are we looking at? Well, quite simply, any kind of retest of this area are going to be quite telling. Price has kind of stepped back into this area now. So if we look at recent price action, you know, all bullish reactions at these lows is paid to be long. Okay. One thing I would be a little bit cautious of here is looking at this. And then looking towards here, price moving back up into the 50% of this, so the upper half of this displacement leg down. And we got the golden pocket here as well, all right? So that's not really to be trifled with. Looking at that area there as well, obviously we know that we've got the daily order block here as well. So we know that price is running up into a little bit of resistance. So I would be, you know, I think we've definitely got room to move higher. Plus we've got this bearish gap above us, right? So if we draw that in, I think if price is looking to go anywhere, first of all, then it's probably here. So now we could say, okay, well, if we get some decent intraday setups, you know, longs into this area here definitely aren't out of the question. However, we need to remember and you know, respect our bias. And for that, if we're ever unsure or if we want a little bit of extra confidence, we turn to our Bitget Pro, B Pro. It's our in-house indicator here, and we're looking here at the trailer. This is the 4-hour trailer, this big black line at the top, which has helped keep us bearish. Any retest of this, as we saw here, here, and here, lead often to really good trades. In this case, to the downside. If we were above the bullish trailer, then we'd be looking for longs to the upside. So it leaves me a little bit neutral today. Just for anybody of interest from an intraday perspective, how I'm looking at this is the kind of key liquidity pools. If I just put the liquidity, but put the session breaks back on, sorry. Yeah. For me, I'm just looking at what price is going to do in the extremes of the range. Good friend of mine and just a wonderful trader and pretty solid all-round human being, Follis, says something that always makes me laugh, which is, if you're looking for to trade the extremes, if you're thinking about this in the way of almost range trading here, your highs and your lows, that's where you want to favor, taking those trades. And he always says, don't diddle in the middle, right? Which makes me laugh. It's true, when you're in no man's land, especially when you're looking to trade liquidity, you need to be really, really careful of that. So as we look at it here, I think I want to see how price reacts up here on an intraday basis, especially if we align this with our New York trading session. If we do something like this, then I think, then we're looking on for shorts. If we got a quick flush down here, however, and then recovered this level, then I think that longs are the order of the day. That's just looking at that from an intraday basis, all right? So with that in mind, we're going to pop across. We're going to take a look very quickly at the news. Obviously, we've got really, really key news catalysts coming in today and in just over an hour's time, which is the CPI. We've got core CPI, CPI month on month, and CPI year on year as well. So we want to factor that in. Aussie, 55, young. There we go. They say now, I think, is it life begins at 50. So you're really only 5, mate. But if you've got retirement on the horizon, then absolutely cracking news for you, mate. So here we are. This is what we're interested in here. Wednesday, we're interested in the red folder news. And just these are the really key ones today. Core CPI month on month, CPI month on month, CPI year on year. Then we've got Powell testimony again. And then later, just after that, we have crude oil inventories as well. And just with what's going on at the moment, we need to factor that in because look what happened last time. Forecast 2.2 million. Last time they had a similar forecast and it came in at 8.7 million. At the moment, oil is quite prominent. You've got the discussions between Trump, excuse me, and the Middle East in terms of asking them to up the, production of oil to take the squeeze off of that market, right, to ease, everything from political tensions, etc. So that's worth it. But, CPI is really, really, really key. One of the reasons I use Forex Factory here, especially when I'm teaching, is because they give really good breakdowns of what these are, right? So if you click on the little folder here, you can see, because the key thing with core CPI and CPI is that core CPI excludes food and energy. And when you look up here, you can see the change in price of goods and services purchased by consumers, excluding food and energy. What's the effect? Well, actual, coming in. So when the print comes in here, greater than forecast is typically good for currency. So that means we could see strength in the dollar. Strength in the dollar can be interpreted in a few different ways. It can be interpreted in, the fact that the markets may be kind of in a little bit of a state of risk-off sentiment. We would then want to align that with the bond markets as well, ideally. But also, you get in points when Bitcoin and the dollar index align with one another's, really struggling to say, align with one another. And therefore, you can see a correlation. So let me show you what that's like actually playing out in real time. Balanced 818, very much appreciate that, mate. Thank you. So let me show you what that's like playing out in real time. I'm going to get the DXY chart up. So let's just first of all look. US 2-year bonds today up 0.23%. The 10's up 0.23% as well. Strength in the bond markets. How are the equity markets looking? How are our indices looking? Our indexes. We've got the Nasdaq today that's up 0.06%, and ES. So that's NQ contract is just the mini contract on the Nasdaq, and ES is the mini contract on the S&P 500. So they're our tradable contracts. That's what we look for there in our futures contract. This is down 0.09%, so that's showing a little bit of weakness. The Nasdaq is up 0.07. Normally these are a little bit more correlated. So there's probably a certain company or a couple of companies that's in the basket with the Nasdaq that's not in with the S&P 500 that's performing particularly well. For example, the reason that the indexes took such a hit a little while ago with the AI news coming out of China was because Nvidia was really propping up the indexes in a lot of respects. Not so much with the Dow Jones because the commodity markets, right? But we look to the S&P 500 and the Nasdaq because of their holding of technology stocks as well. They're considered, risk assets when it comes to traditional market trading. So when we go across here on to the DXY, what we can see here are our key levels right now. This is a really key range for me, but I'm not going to go back to historically. We're just kind of looking and focusing on this level here. Look, again, good support level running through here. First of all, it's a range high. So we see when this was flipped, this one ends up being a really lovely area of support. What do we get? We get this deviation here. But look, even this, when price closed below here, we look for the retest, price sold off. It then gapped back above here and has held the level. Deviation back above. As long as it holds above this level, the chances are that we're seeing a little bit of strength here. But what I really want to show you is if we overlay no, it doesn't want to do it. It's all right, we'll do a new one. So we overlay the price of Bitcoin here. Just change this slightly brighter color. Yeah, what we're looking for here, right, is if we just spread this out a little bit, this is a really good example. Look how when we had strength in the dollar here, yeah, the dollar index. So the dollar index is a basket of currencies weighted against the dollar that's heaviest weighted towards the euro, all right? And what we're saying here is, look, when you're seeing extended strength here in the dollar, often that's quite bad news for risk markets, especially crypto, all right? Now, not always the case. We look at it here. We got them both aligned here to the top. But then look, when the dollar ends up selling off here and you have this big aggressive sell-off all the way down here, we see how that really, really helped Bitcoin. Now, they're not always counter-correlated, all right? For example, look, price of Bitcoin was going up here. The DXY was going up here as well. So we need to be careful how we kind of interpret that correlation. What I tend to do is look at this and then combine this with the bond markets and say, okay, look, we've got a strong DXY and we've got strong bond markets here. What are the indexes doing? Well, what's the S&P 500 doing? What's the Nasdaq doing? Okay, if we're seeing, some consistent strength through here and then consistent weakness with the dollar and the bond markets, then I'm thinking, okay, the market has a decent appetite for risk, which means that there's a little bit more chance that you get those speculative bids towards crypto. So with that at the moment, we've got relatively strong bond markets this morning. The dollar is pretty flat. Equity markets are mixed, so it doesn't really paint the very best picture. And I'll tell you for why, because we're just over an hour away now from CPI. So this doesn't really lend us into making any good trade decisions right now because the market is looking for that catalyst, that injection of volatility to really start to take off. All right. Daniel, good day for you. Good day to you too, my friend. Just for anybody that's interested as well, gold markets are having probably their first, corrective move here. This one started in yesterday. This thing has just been on a tear of all tears. We always been looking for this level to be, to be taken out, and we never even retested it, right? The strength in gold has just been unbelievable. So again, while we're in these conditions, just a little bit of advice for any of you that don't really think about it this way. Look for your down close candles here. Yeah. And just look for price to be holding these areas. All right. So this one here, all right. And then even this one here. These are the kind of areas you look to hold, because when you start flipping them and then you start flipping the up close candles here, then that's when you can look for these corrective moves, and you can just look then to say, okay, well, where's price likely to have some kind of reaction? We've taken out a kilo here, bullish gap, and we're coming to retest this order block here for the first time. So, could be coming into an interesting area here for gold. If we start deviating some lows, get back above, I think we could see some continuation here for gold. All right. Just for anybody that's interested in the gold markets, I know most of you wonderful degens are a lot more into your crypto, which is more than fair enough, but it really can help us with our view on crypto to just have a decent understanding of macroeconomics, to just have a little bit of an understanding about traditional markets, bond markets, bits and pieces like that as well. Just look at those correlations, especially in the times when the waters have been a little bit muddied. So let's take a look at our old friend ETH, shall we? Hey, Sebster, how you doing, my friend? So on an intraday basis, I'm not really expecting a ton today. We are going to jump on and do our live trading show with members, which will start in about 45 minutes, guys. But that, let me just, is definitely going to be interesting today because we've got, we're going to be running straight into CPI. So we'll definitely be looking to see if there's any intraday plays on the NASDAQ or the S&P 500, especially bearing in mind that they're out of correlation at the moment, which is, happens a lot less than it doesn't. Let's just take a very quick look on here, see if we've got anything in Trump's WLFI launches, macro strategy fund for Bitcoin, Ether, altcoins. Yeah, I mean, look, just to kind of touch on this as well before we dive into ETH. Sorry, we will come back to that. A few things very quickly. Bitcoin dominance, close between this very small up close candle here. This is the kind of thing we want to see. We want to see this continuing to drop here. All right, we really want to see this back down around this level and then dropping down back towards the 50%. Then you'll typically see the big run in altcoins, right? I know people seem to be obsessed with alt season. Are we ever going to get another alt season? Don't worry about that. Think more like a traditional market trader would think. When there's turbulence in the markets, play strength. Play the strongest companies, the best teams, the best products, the best fit, your real kind of outside punts, like we had that nice little season with meme coins and stuff like that. That's fine, and they're all good fun. And maybe they come back, maybe they don't. But typically, there's a flight to quality in market situations like this. So you want to find those really, really good projects and those good teams and have that good kind of just even it's a little bit of a fundamental understanding. So anyway, we want to see this dropping down, right? The total charts, when we look at these are what we want to see starting to recover. We can see from our arrows in here, this was where we started to really get in trouble with altcoins here when we lost this key level. So just to that point, to just keep an eye on those. But the other thing that I wanted to discuss as well very quickly is just kind of looking and reading the sentiment in the market at the moment. That's what's got me more bullish than anything, is that people are just really, really, really talking about this whole thing. It's over. We're not going to get this again. We're not going to get that again. Blah, blah, blah. No, do you know what? We might not, but no cycle is ever the same, especially when you've got something where you've got so much key information coming into the market, When you look at it, it's just mad, all of the things that have happened to Bitcoin ETF. You've got Ethereum with the ETF. You've got like mass adoption of cryptocurrency. You've got more countries than ever using it. You've got, the first adoption from, licensing. Just there's crazy amounts happening. The world is clearly moving and adapting to align itself with a future that involves crypto and digital currency. But very difficult to know exactly how that pans out. So you either have to be of that kind of sailor-esque mindset that you have that belief, you have that kind of conviction, and then you're just investing over a very long period of time. So it doesn't have to be that long, but you're buying things that you're thinking, okay, is Fartcoin, and I love Fartcoin, by the way, it was been really, really good to me on the thing. But if I'm sitting there and I'm thinking, is Fartcoin going to follow a similar path to Bitcoin? Probably not, right? Some of the more speculative assets that are out there, some of the crazier memes and stuff like that, is that going to be the next Bitcoin? Is it going to be the next Ethereum? Is it going to be the next Solana, etc.? So, just having that mindset can help. But the sentiment in the market at the moment is very, very low. I like the fact that we've had these long downside wicks on so many of these assets, meaning that, price really had a big sell-off, but met an incredible amount of buying power coming back up here. So with that in mind, what these things don't help with is finding kind of entries and stuff, because these wicks are massive. So what we're looking for here is what's capping the downsides of the market, which is this swing low. Once again, we find ourselves in an inside bar pattern here. All right, so that would be the range for the inside bar, for the mother bar actually. And, like with range trading, what are we doing? We're looking at the moment, it's being capped by the midline, which is around about here, but it's holding the range lows. So I think there is a chance that price looks to move up here on ETH. We're going to move down to a 4-hour just to get a little bit more context. Again, just as we saw with Bitcoin, price has set this order block here. So, this is what I'm looking at here. I'm saying, okay, if this is going to move up from here, this is an area I would expect to hold. If price started closing below here, then these lows here very, very much come into play. One thing that I think is quite attractive for price to the upside, right, is this trend line liquidity. All right, if we just mark out the untapped swing highs, Yeah. And then you look at the swing lows, we've only really got these. Yeah, obviously that massive wick down there as well. So basically, you know, when price was moving up here, you know, we created the swing low down there, the swing low here, the swing low here, the swing low here, for example. Then what happens is this becomes a really key liquidity pool. And as price breaks down, it starts to chase out this liquidity. All right. Now, what we're looking for is we're looking for this to happen on the opposite, right? So we're saying to ourselves now, okay, well, let's look and see if we can get the reversal of that. Can we get ourselves back up and start to chase out this liquidity from the highs? And just really kind of being patient at the moment and playing this level to level. You know, it really does feel like the market's just going to have some big pump in it at some point that's going to really kind of leave a lot of people behind. But at the same vein, we can absolutely see this thing, you know, moving lower. So it's a very interesting one. NBA Young Believe, how are we doing, my friend? Good to see you. Alex, good morning from Florida. Good morning, mate. Why is gold peaking? It's an interesting one, right? I think some of it's going to be the fact that it's just been on such a hot run. Yeah, it's you know, people now are probably seeing this as a little bit overextended. It needs to kind of pull back to key levels and find that kind of key point of value where it builds that base, and then people kind of say, okay, you know, there's a great belief that that's not going much lower than that for a while. If we look at that from the other perspective as well, is because we're coming into kind of like a key week of news. You know, today CPI as well is going to have an effect. We've obviously got, you know, Powell testifying again. And then we move into PPI and unemployment on Thursday as well. So could just be that thing, could just be cooling off. I mean, the structure of it still looks beautiful, right? So I don't think that it's necessarily peaking. If we, you know, take a look at it, the peaks might be getting a little bit closer together at the top. That can be a sign, you know, especially if we look at the 3 drive pattern. If you've got any of those playing out, that maybe price is due for a deeper correction. But like I said, even like with these markets, if I'm, you know, if we're looking at gold here, I would just be looking for those, you know, those bearish candles in this case, like this. I know gold's basically the inverse of this chart, but these down close, these bearish candles, when we close above them, we want to see these areas hold. If this is really where the buyers are and price is going to move up, you don't want to see price sort of closing too deep into these areas. So as long as it continues to hold those previous areas, and those areas of consolidation, then I think gold's going to be absolutely fine. Steve Etienne, my friend, how are you doing? How have you been? Good to see you. So really, on a 4-hour scale, I don't really have much else for this. And Whack, how are you doing, brother? Really good to see you with us, guys. So yeah, I'm really sorry to be kind of boring on this one, really. But look, my worry here is that price hasn't really kind of taken any liquidity. Yeah, it's kind of reacting at this low, but that's only kind of, you know, like we said, that's our inside bar pattern, right? So this is our mother bar candle here on a daily scale. So we'd expect some kind of progress higher, but typically I like to see these lows kind of taken out here. But the one bullish thing that we've got is we're holding above this down close candle here. You know, we've had a nice bullish engulfing candle here. So, you know, price could ultimately look to move up. But again, very, very similar to what we discussed on Bitcoin. There's definitely a concern that, you know, this golden pocket and this bearish gap that's up here is gonna push price a bit lower. We really need to wait today and see what's going to happen with the CPI print as well, because, you know, if that comes in and that's not particularly great, that could kind of have, you know, effects across the whole market, really. So that's where we are on that. Intraday plays, we're going to look at those, but we would only look at those after the CPI print. You normally want to give the market at least 15 to 30 minutes to kind of settle down. It will normally look to take liquidity on both sides of the market, really set that volatility, and then we can get our trading range or our dealing range for the day. So with that in mind, we've got maybe about 10 minutes left in the session, maybe a little bit less. So I don't know if anybody has any particular pressing alts that they'd like me to take a look at, or actually for Alex, while we wait for those kind of questions to come in quickly, we could just take a little look back at gold again here. This is what we were just discussing previously, right? We've got these down close areas, these prior consolidations before the expansions. These are the areas we're looking to hold. Gold has kind of done that, you know, typically particularly well through this area here as well. We had a bit of a deeper correction in here, but once that was recovered, these areas have obviously been respected. Now, obviously, we can see that, you know, price has come up, taken out this high, now come back down below this here, which I'll draw in properly, is that first most recent kind of change in state of delivery here. So I'll label this up. Now, the thing with this, just get rid of that. Now, the thing with this that's of interest to me is that this down close candle here, which is also a 4-hour order block, hadn't been retested, right? So we've got price sweeping liquidity down here from the lows, reacting at bullish gaps. We've got another bullish gap here. So this is a key area for me to look and say, okay, do I want to be long in gold here? If I get some decent setups down here, I would certainly consider it. But obviously at the same time, excuse me, being aware that we're still, bearish order block here. Price closes beneath, retests, can't get above, and then sells off, retests, selling off. So it's kind of between these two areas at the moment. I think any strong reaction down here and it gets back above this level, I think longs could be back on for gold. Michael, yeah, sure, mate. Let's take a quick look at Sol, shall we? What do we got going on with our old friend Solana? Yeah, great to catch you too, Stevie boy. Really good. I'm glad you're well, mate. Let's have a look here. Actually, just wanted to check something there on the note. So weekly levels, we got swing low developing here, but it won't be in until that one's set. This is definitely a new target down here. In terms of what's capping the upside here, the high at 264, big wick. When price closed back underneath like this was the first indication that that's absorption. Sellers have stepped in here, and until you see price close back above this level, start making moves towards that again, and the chances are this is a corrective move lower. We inverse this bullish gap here with this large candle, meaning that the target then becomes the immediate swing low below. All right, even on a weekly scale, that's at 168.88. Now, we don't have to obviously go down that far, but to not do that, we really need to be seeing a reason on the charts not to do it, not just because we don't want it. So this for me was a really interesting pivot point here. We came up, this was key resistance, then the consolidation before the breakout. Any retest at this level, look, good buying opportunity. Price got down low. This is a bit messy here, but ultimately then when it really kind of confirmed, it retested here, sold off. So when we got back above it, I really liked this as a long from here for a couple of reasons. This was the last high before price broke out. We got the close above, meaning that those highs, we're looking to get those initial bounces, right? So, I learned this from Tom Dante. I still think one of the best traders out there, especially with price action. This high here, before we had this strong breakout, if people were, short this high, for example, and they're waiting to mitigate or go in, or if that's the breakout and your buyers are really stepping in here, these areas, if they're not retested, especially if you get a bit of time between them, can be really, really good opportunities. So you get in there on a lower time frame, you've got a fantastic day trade in there, for example. But ultimately, this kind of bluey grey box, this whole area, look again, when we lost it here, dipped into this bearish gap, we've held below it, and now we're selling off. So now I'm saying, okay, well, I need to understand where the liquidity is, right? What's the market reaching for? If there's nothing clear and obvious, I will kind of look to the order blocks as well to give us that little bit of extra confluence. And we can see here on a daily scale, up close candle, price close below, this is now completely getting rejected. All right, so we need to see price back above this here. What we are doing, however, and I know that these down close candles here are within the range of these larger down close candles. However, if we got this right, if we got a candle close above this, a bullish candle, obviously with a nice close above, then, in an ideal world, you get a slightly bigger close above this level as well, because we can see, what key support and resistance that this has offered. But anything above here, you look for that little bit of a pullback here and then to long. That's certainly how I'm kind of looking at this. Outside of that, I think while we're under here, we have to be cautious on a daily scale, right? Now, we want to draw in our key liquidity. So we've got another couple of lows to be considering in here. We've got this one. And we have this one here as well. Okay, so that's very much areas of interest for me here. Price running these, recovering them, then I would look for long setups from here, right? So something like this. And then if we got the opposite of that, price comes back down here, we start losing these levels, then that's when we're going to start trading this level to level and looking for this to take out the liquidity below. I don't know why, but today my trading view is not letting me use the back button, the delete button. It's just got rid of it for some reason. In one of trading view's many regular quirky bugs. So yeah, look, while we're down here, I think we drive down and we push down into these lower levels. We get above, we set this bullish order block here, we reclaim this level, then I would look for Sol to push up. We'll just take a quick look on the 4-hour for you as well, my friend. So if we're looking for kind of early stage recoveries here, again, we want to see liquidity taken. So we've got that, all right? You've got that kind of initial stage here. Liquidity's been taken. So, you know, we don't want to be put off by the daily order block because price could come all the way up here and come all the way back down. And all you see is a big wick above it and it never gets set. So don't let that put you off. Don't see that as a line of resistance until it's actually set. So on a more aggressive scale, we have this down close candle. And I like this a lot more. I'll tell you for why. Because we then got the down close candle. This would become an order block that's been confirmed. We need price to close above it first, but it's been confirmed after taking liquidity. All right. Order blocks that are set after price takes liquidity become more of a high probability order block to react at. All right. So that's what I'd be looking for here. Price to close above that. The reverse of that would be, when do I think price is potentially moving lower? Well, that would set our bearish order block down here. But we would need price to close below it. So price closes below this. Let's just do this quickly. So try and do that a bit straighter. So price closes above there. Yeah, we can look for longs into this level. Obviously, it'll be more of an intraday play. If price closes below here, then we would look for price to retest this area and then move down to our key liquidity targets starting here. So basically, these are the two scenarios that I would be looking at initially. And off the basis of that, I'd be looking to keep runners in play, meaning that I would look to keep some of those day trading positions open that you can potentially develop into swing positions if you really start to catch a good reversal point. I don't think there's tons and tons of room left to the downside in truth, but I don't know that. Nobody does. I think the chances are starting to get to a point now where when we look at some of the absorption that's happening, that there's going to be some kind of catalyst that's going to come in that can really move the market higher. So that's where I want to have myself positioned. All right. At the moment, for me, I'm looking at key spot bags that I like the look of. I said about this yesterday. I think I'll cover this very quickly. Things like FET. Let's see, maybe it was on the Bitget contract. Yeah, here we go. So with FET, while we're down below here, that we can see this key area. It's very, very loose support down here, was all the way back there, but really just need to see price above this level. I want this to be the deviation, but in truth, what I'd prefer to see here is price sweep out a low like that, then get that recovery, and then, you know, look to be a buyer here. But I'm happy to stack some of these, you know, as we continue to go forward. At the end of the day, I think at the moment it's about kind of identifying some of those key buying opportunities for some things that we're looking to hold a little bit longer term. One of the other ones I wanted to cover quickly, just because Chris, our was it on the Lexi chart? Or, let me just look quickly. Yeah, Chris, our fundamental analyst, has been going on about this for ages, and I know that he was, yeah, here we go, we're looking at it down here, was a keen buyer of this, with buying up these lows here on Telcoin. So I don't know if any of you are invested in Telcoin, but this has had a really, really nice run. It's got fantastic fundamental drivers behind it as well, and this is probably holding up as well as anything is in crypto. But once again, we can see, if we just look at the key areas of absorption here, yeah, areas like this. All right, you can see in there. I mean, this less so because there's a little bit less information that's coming back from here. And I wouldn't really take it as low as this, for example. But, you know, if we're looking at this from the lows of these wicks, I'd say you've got something pretty much like that, you know, that's acting out as a range at the moment for this. So again, if price can get up and establish itself here above these highs, I think we can really rip. But I think if it starts to break down here again, then, you know, range low could give him some really good good buyers. All right, guys, we're going to call it a day there. A couple of minutes over what I expected, but actually managed to keep it under an hour, which is always good. Michael, you're very, very welcome, my friend. It's always a pleasure to be here live with you guys. Obviously going to be live with members again this afternoon. We're going to jump into our live trading session in about 30 minutes. So I will see you legends there. If you want to join us or you're interested in how you can do so, you can find all the information down in the description. You can also reach out to me on Twitter at BC_Richfield. And for anybody that's interested this afternoon, actually in a few hours time from now at 3:15 UTC, I will have the pleasure of being on Crypto Town Hall today with some of those legends. So please do stop by and say hello if you're around. All right, guys, have a fantastic day. Same to you, Alex, Michael, Steve, all of you legends that were on the show today. Far too many of you to name, but I appreciate every single one of you. Be safe. Keep an eye on the news. We've got that CPI print dropping in around about 50 minutes from now. Geo, you legend. And yeah, I'll see you other legends around the nest, and the rest of you, I'll catch you all again on Monday, or I will see you around on Twitter. Have a fantastic week, guys. Take care.